Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin. Dennis Dick is here with us, but he would not be joining the show until a little bit later. He is swamped, predictably so, underneath, I believe, an avalanche of trades or positions. So Dennis will be on with us in a little bit, but we have just a lot to run through here. Obviously, talking through yesterday's session, the worst day of the year, basically the reaction to it, how to approach today. We'll look across the market, the different sectors, see what happened, and kind of talk through what that means going forward. We have some individual news as well, but the macro story is going to be the theme of today's show, and we have a good guest for that. We have a macro guest on, Chris Temple from the National Investor. He would join us at 8:35, the good macro guy. So that'll be the theme of today's show. Joel, what's happening here? Are we doing better overnight?
Oh, what a rebound here, Spencer. We'll break down the overnight action. The pre-market low, 2775.75. We're almost 100 points off that level. Your high, 2865.25. Not much there, folks. The intraday high from yesterday was up at 86.25. So that's a target on the upside. Not sure we got another 30 handles in us. Crude in the green here by 41 cents at 55.10. We have gold down $1.40 at 14.75, but definitely revving its jets up for 1,500. And gold is up 1.7 cents at 16.41. Spencer, how you doing this morning?
I'm doing okay. I'm recovering from that wild day we had yesterday. It seems like today won't be quite as bad. Like you mentioned, we're already up. We did label China a currency manipulator for whatever that's worth, first time in 20 years. But it seems like things have calmed down a little bit today.
Yep. Just a couple things here. Just a couple notes that I took from yesterday that I wanted to share with our listening audience. Number one, I got lucky because I was a bad boy yesterday and I tried to buy the dip. And I did it a couple times, and
where'd you buy?
We got the reward. I was messing with the S&P futures a little bit, and we got that rally at the end of the day. And I'm like, okay, this is good. I'll observe things overnight, and maybe we'll get a rebound. And so at 4:00, my phone was upstairs, or this might have been like right at the close or whatever. And I'm like, I'm going to put a stop in, I think I put it in 10, 12 handles for where the market was trading. And I'm like, you know what? If they come and get me, they come and get me. So I go up and I get my phone. I talk on my phone for 2 minutes. I come down and I was stopped out. And I'm like, what just happened? And that was before any of the craziness took place, the last 15 minutes, and then that ridiculous drop at 6:00. So the point of the matter is, if you're trading, you're doing some intraday trading or also investing, trade smaller because you're getting much bigger volume moves. So if you normally trade 1,000 shares, maybe only trade 500 because you're going to get the same kind of price action. Also, use stops. I know you can really get tanned in these markets, but the stop that I used yesterday wasn't on an overnight thing. So I got executed at my price. And the other thing too is don't be afraid to put orders out there. If you're long something or short something and you have a target, put it out there because there's a lot of volume, there's a lot of liquidity, and there's a lot of things going on. And believe it or not, sometimes you can just get some remarkable fills. So, don't be afraid to put orders out there. And I just want you to know, when Triple D comes on at 8:50 last night, he was, when he comes on at 8:50 today, he was out of breath. when he was talking to me last night. He was absolutely out of breath. He was trading so much and so much activity that he was panicking. But hope you're doing okay out there, Triple D, and we'll get an update from you at 8:50.
So let's talk about that after hour session there. So at around 5:45 or so, somewhere in that window, that was when the word broke that we had officially designated China as a currency manipulator. First time that it happened since the Clinton administration. So, and that's that big red candle you see right there.
Now, see, this is where Triple D gets a little advantage on me, because when we have our S&P versus spider battles, right? And he thinks the spiders, that hour that it's closed from 5 to 6, right? It came out at, before 6 o'clock. So the spiders were trading. And he said when that news hit, when he said it was just one of the quickest drops he's ever seen. And so, because obviously he's looking for hedges and things like that. So, if you're trading and you're trying to be a hedge trader, that's one point with the S&P futures where you're naked from 5 to 6 o'clock. So they did it, they pounded it, and now it makes it really tough, because is that a short-term low? Do we have another V bottom? You're 90 points away from that low. Very, very difficult today. So I thought today would be more of a back and fill from yesterday's low, which was 28.20. And, people like, oh, I thought I missed the bottom, so I'll stack bids ahead of that low. But now, man, if you say, there's going to be bids ahead of that 20, the 75.75 low, I mean, that's 90 points away. So a lot of action going to be both on the upside and the downside.
I would like to point out, I saw this really good tweet yesterday. It was a tweet from Michael Batnick, who I follow on Twitter, a chart of the S&P 500 going back to March of 2009. And he said there's always something. And along the steady parade higher, there was always something. Yesterday we had the yuan devaluation. And then before that we had rate cuts. And we had the futures falling after the election. We have Brexit. We have global sell-off. We have Ebola. We have a fiscal cliff. We have a flash crash. We have the S&P downgrading U.S. debt. And nothing mattered. I mean, in the long run, we were at all-time highs here. So nothing mattered. None of those headlines, none of those you would think bearish headlines really mattered in the long run. I don't know what it means going forward, obviously, but it just goes to underscore the relentless rally we've been in for the past 10 years.
Yeah, true. And, it's hard, what are you going to determine? I mean, I say, oh, it was a Russell in a bear market. There's always stocks that are going to do their own thing. And we've talked a lot about being a stock picker. Dennis tries to do that with a broad basket of stocks. I'm more inclined to, try and hard to beat the market. So I like to be in a lot of index funds related to the market. But just to give you an example, and I think one of the best non-calls that Dennis made yesterday was on this ALLK. And, he talked about it. It's not a stock I trade. And he's like, these stocks can go absolutely anywhere. And I was looking at it that it was going to fade off the pre-market high, and I couldn't have been more wrong. So, if you have stocks on your shopping list here, keep it out and do it, because right now in the long run, it's proved to be the best investment. Whether, what's going to happen in the next 6 months, next year, or whatever. It's a long-term trend, and we'll see what happens today.
All right. So before we get to the headlines from this morning, let's just look at just sectors from yesterday. So what held up? Well, utilities held up a little bit better. Tyson Foods held up.
Earnings.
Yep, right, off earnings. Bitcoin held up. The gun stocks held up. Gold, I think, held up a little bit. So outside of that, not a lot of places for people to hide.
No, nope. No, I'm looking at, I looked at, your T's and, your Verizon's kind of held in there, getting some juicy yields on those. Also, if you look at it too, I mean, the yields on those things has been very attractive. And if it doesn't look like interest rates are going up anytime soon, I mean, always, you got to be, wary of that. But, the safe havens continue to be the safe havens.
All right, let's go to this headline that we saw like 40 minutes ago, 50 minutes ago from AMD. I have never heard of this website before.
No.
It is a headline from regarding AMD. The website is wccftech.com, reporting that Lisa Su is considering a role beyond AMD, and she maybe is preparing to find a successor, and is eyeing a role at IBM. I don't know if that's true. I've never heard of this website before, but Lisa Su is a rock star on Wall Street, credited, given a lot of credit for AMD's rally. And the stock didn't trade immediately off that headline. It traded about like 10 or 15 minutes later that I saw, but it did trade eventually. So if you're wondering why the vol in AMD this morning, this is why.
First of all, what's the site?
Yeah, wccftech.com. Never heard of them. Doesn't mean they're not legit, but I've never heard of them. So take that with a grain of salt.
Okay. And has there been any response from the company?
Not that I've seen.
Okay. All right. Well, you got IBM up 224. I mean, first, don't they have to get rid of who they already have, before something like that happens? I mean, rumors are rumors. They're liking it with the IBM right now, trading up at 142.99, up 223. Would I chase this? Would I chase after this thing? No. Would I be interested if she went over there? It would be very interesting. But with these kind of things, the longer it takes for something to actually materialize. I mean, the only thing I would say now is there hasn't been a statement from, like, if she's just not going, then she's, boom, she's on Twitter, right? She can come out. The company can say it, that's completely false. So I think not going to confirm or deny, just from like a market feeling, a market perspective. Let's hear some news. Let's hear some news from AMD or Lisa Su on that one.
All right, let's go. I would like to stay relatively broad, relatively macro today. So let's just go to the S&Ps and look at the top 10 and look at how they did yesterday, because we don't get days like yesterday very often. So I'm going to pull Microsoft here, Joel. Just kind of break down what you're seeing from this chart.
Well, Microsoft came off that high, got hit with the market, had to gap down. I mean, I don't want to talk too much about yesterday because that's not going to do us any good. I want to talk about yesterday and look at the low of the move at 130.78. Let's see if there's any lows in that area. Actually, you had a low at 130.71. So if you're trying to swing trade, you want to get long, that's an area to lean on for now. You're $3 away from there. So you might have to pick another intermediate level. The better thing to do, let's say you did pick some up on the cheap yesterday, or you're looking to peel out of a longer term long. I like to look at, let's call the high 142, that low 131, 11-point move, 5.5. You can add that 136.5, 137. I think you see some sellers there in Microsoft, and I'll go with support at yesterday's low, 130.78.
What about Apple here? I mean, all the chart count.
I know. Apple, earnings day high, right? 220, got over 220 and change. How are we trading to the low? 192.58. Was your low. You're a clean $3 above that. Once again, but that was like almost a 30-point move. So let's see. One target could be 98.85 and got a gap up to that one in 201.63. But a lot of talk about Apple and, the effect on the Chinese tariffs. It didn't seem to have an effect last quarter. How it's going to, moving forward, we don't know. But a little bit on the rebound here. Let me give you a pre-market high. I think that could be a good indication of where you have some sellers out from yesterday. In Apple, in your pre-market high comes in at, just had to adjust my charts here, trading right near the highs of the session. Pre-market high comes in at 196.30. So keep an eye on that. We're only 40 cents away.
Amazon would be next on the list, and they had a headline of their own. Well, Bezos is just continuing to sell shares at a faster rate. We know he's selling shares to fund his space pet project at Blue Origin, but he did sell more. That news broke yesterday, so that's kind of the overhang on the stock.
Well, he's also stated that he was going to sell $1 billion a year before to fund what's the name of it, Blue Origin or something.
Blue Origin,
Yeah.
right.
So, but I mean, he owns a lot of stock, and I just say hats off to him for taking some profits. Whether or not, he thinks the company's all times high is in or not. I mean, he's doing what you should do when you have large investments and they're moving your way. The low from yesterday down at 1748.78. For this one, I'm more inclined to maybe try and get this closer to 1700. We mentioned that yesterday. There was a pair of lows just under 1700 and one just above. So it's a ways away. It's $86 away. Also looking at yesterday's session, the high, not too far from the high. This is interesting on a relative basis here. 1788.67 was your high from yesterday, and we're only $3 away. So on a relative basis, it's holding up pretty well. Big old gap to fill up to 1808.
What about Facebook here?
Facebook earnings day high, man, kind of in the middle of nowhere. I think there was a gap in there that it filled. What was the low from yesterday? The low from yesterday was 81.73. This one's a little bit weaker than the rest compared to the Amazon as far as where you're trading compared to the low of the day. Low of the day was 179.34. You closed 181.73. For a short, I would use the first level of support as the close. And as far as resistance goes, we have not been able to trade higher. Just above 184 is your pre-market high. Above that, you open up to yesterday's high.
Explain why you lean on the high and low of the day.
Because first of all, shorter term traders, use those levels. And secondly, computer, maybe they're the same thing. The computers lean on those levels. There where orders, there has to be some kind of a substantial order at one, or a particular area to stop the market. And also, I know a lot of people don't pay much attention to daily pivot points. But I do, and that's the daily high, the daily low, and the close divided by 3. It's just kind of an average. So those are the 3 numbers. And then if you're following the daily highs and lows, then you're going to be aware when there's a double bottom or a triple bottom. So if not, if it keeps making new daily lows or new daily highs, you wait for some kind of pattern to develop.
All right, we could do the rest. I mean, Google would look the same as Facebook.
Yeah. I just
JP Morgan, Johnson Johnson, and Visa are the final 3 of the top 10.
Yeah. Berkshire is kind of its own animal. Moves with the market. I mean, today, the banks really took a haircut yesterday, and you had the TLT trading in the red here. That was something that nibbled a little bit in Bank America yesterday. It's getting a nice rebound here. So Bank America is pretty easy. Yesterday's high, 28.64. We're only 24 cents away from that, and the gap to fill up to 28.91. So they're rebounding. The financials really got shellacked over a couple days with the lower rates just after a breakout. So I like to see the financials stabilize.
Any other sectors specifically on your radar?
No.
Technology had the worst day of them all yesterday. That's to be expected. But everything else was pretty much down between 1% and 3.5%.
Exactly. Yeah. It was pretty much sell everything. One thing that's kind of stood out to me, and I'm not sure if someone mentioned it in the chat, but fake meat, Beyond Meat, did not have a bad day at all. It did drop a little over $1, but on a relative basis, I don't know how some of these other IPOs held up. Roku had a decent day as well. So there was certainly no weakness, major weakness in those 2 stocks. So that's a good sign if the market can turn higher. Good sign for them.
If you can hold up yesterday, then hats off to you. That's off to you. Then, then you got some strength there, some underlying buyers. Is yesterday a day or this morning a morning where you're gonna go in and start buying hand over fist in your long term
No,
account?
no,
In your long term account,
no,
No.
no,
Okay.
nope. Hand over fist? No, no. I think. I mean, you can make predictions about the market. I think this is the way it's going to be until the election, and that's a long time. Yeah, we might creep up to new all-time highs. Yeah, maybe we may come down and test 2,700, but we're in a trading range, and it's a big old trading range. If we come down and pierce the bottom of the trading range, might be more inclined to add. If we get up near to the top of the trading range, I'd be more inclined to peel back.
So in other words, in your investing account, it is always a good time to buy because
It's in the middle. I mean, so far that's the long term. That's the long term trend. I mean, one thing about selling is it's expensive, right? I mean, if you're selling and then rebuying, you're paying commissions and stuff. Always keep plenty of cash at hand. But I mean, yeah, it was a bad day yesterday. Yeah, the Dow dropped 1,000 points. I mean, what are you going to use to determine if we're in an actual bear market? Because there's always rebounds here, and still the longer term trend is up here, and we're on a pullback.
it is ironic though that we had a rate cut. What was it? Like 4 days ago, 5 days ago, and then what followed immediately after was the worst day of the year. It's like they used a bullet before, the guy broke it.
Supposedly they're out ahead of things.
Yeah. Hey, I'm no Fed expert. I'm just pointing it out. But it is ironic how that sort of played out. Let's talk about earnings. We have a couple of earnings reports this morning. One of them is, or yesterday after the bell, Shake Shack, and they beat on their EPS. They beat on their sales. They said their same-store sales were up 3.5%, and they raised their guidance for the year by about $10 million from 576 to 585 million. And they also announced a nationwide delivery partnership with Grubhub. So all good headlines this morning from Shake Shack.
Let's take a look. Shack. You've been over there lately, Spencer? I haven't been over there in a while.
Yeah, I was over there last week.
Expensive pain. I mean, the Shack is holding on here. Let's see how it did yesterday. Yesterday it got hit a little bit, up $2. Let's look at the after hours action or pre-market action. You got the 78.48. That's a new high. The move, something they didn't like in here. They took it down to 72.15. We're green here. What would 76? I'd like to right where it's trading right now. This is a real interesting area. You got a couple highs above 76. So let's call 76.60. That splits 3 highs from last week. That would be my area of resistance, looking for more follow through. Of course, if we go into a decline, we're trading up here. I'd use the close from yesterday, 73.34 as support.
And then the other big one this morning or yesterday after the close was Take-Two Interactive. They also beat on their EPS, beat on their sales, and raised their guidance for the year, or they raised their full year GAAP sales guidance from $2.66 billion to $2.82 billion on the low end of the range, and they raised their GAAP EPS guidance from $3.07 on the low end to $3.71. So nice fiscal year sales and EPS guidance raises for Take-Two.
124.75. Not too far off that. That stands as your after hours high. Just keep an eye out here for the 125 area. You had two highs from last week that surrounded that area, 124.70, 125.54. So green, get above that, get into the 126 handle. This is a big move. People, that were buying into the report, buying any of the shorter term options, are getting a nice windfall here. So let's see what happens. Let's see if we can get over that 125 and take out the pre-market high.
And then ATVI EA trading up with this in sympathy.
Yeah, but it's just a laggard here. I mean, it's been trying. I think it already had its earnings report. It's trading up $1.50. That's trading at the highs of the session. Let's see here. Boy, boy, we are a ways. We still got to get to yesterday's high. Yesterday's high, 47.95. Got a gap up there to 48.65. So let's see if we can take out yesterday's high, and I'll use the support as at the close of 46.10. S&Ps are weakening here, folks, ahead of the open. We have pulled off. The pre-market high stands at 28.65 and a quarter, trailing back here at 28.52, which after a 90-point rally is really not that out of the ordinary. And my first area that I'll be looking at here in the S&Ps on a pullback, oh, man, I don't even have an area. 29, 20, 50. That's interesting. That was the low from yesterday, and it's also mid-range on the session. So that's 32 handles away. That's what I'm looking at. That's my first support point looking on the daily chart.
I want to go to this Bill. We haven't talked about Bill Ackman in a while, and Bill Ackman has sold his stakes in UTX and ADP. He's getting out.
Well, kudos to him. I think I don't know when he got into these things, and I don't know when he sold. Do you have any of the dates on this?
No, we don't have dates on when he sold. I will caution that next week, or no, the week after, is 13F Day, the 15th. But so we'll know more about who sold what and how much in a couple weeks. But we know now that Ackman is out of 2. He has like 6 positions, so he's out of 2 of them.
Yeah, I mean, it's it's kind of like the 13 Fs. You're trading off old information here. So if he sold it 136, 137, it's a whole heck of a lot different. So I kind of look at that as old information.
Well, new information, old trading though, because we don't know when. But
hey, did AMD come out and deny that? Because now AMD has had a big old turnaround here. IBM is still holding up. Anything come out from AMD?
Not seen anything from AMD since we started the show, but I am trying to keep one eye out for it.
Okay. Because when we started the show here, I mean, in the last bracket, I mean, it's always a volatile stock, but we traded down to 27.18. Now we're back in the mid 28.
Oh, wait a minute. Here we go. Lisa Sue tweeted.
Okay, there you go.
Tweeted 38 seconds ago. Just for the record, zero truth to this rumor. I love AMD, and the best is yet to come.
Okay, so all right. So Spencer, you made the call there, right? When you're looking at this kind of news and you're looking at the source, I mean, there's your source, there's your news. Lisa Sue staying at IBM. I hope some of you guys are out there buying the dip in AMD.
I'm sorry, WCCF Tech. I hardly knew you, but I knew you for a minute, but don't know you anymore. So Lisa Sue out in their face saying, no, not going to happen. All right. A28 here. Joel, what else was on our list? Let me see here.
Did we do some of these earnings? Do you want to?
We had Marriott that we didn't do. So let's do the Marriott report here. I don't know if it's traded yet this morning. I haven't looked at the chart.
Sure.
But this was yesterday after the close. Marriott reported inline EPS, a slight sales miss, and they narrowed their guidance for the year. So a snoozer of a report.
Okay. We're trading in the red here by $2.35. We are off the lows of the session. At the after hours session, we got down to 125.11. And it's funny because when I was looking at this thing and I saw that it was red, I looked to the left and I just see a cluster of lows right around one. They're a little bit lower than that. I guess you have to call 122, 123. I thought it'd be closer to 125, but those lows, let's call 123 if this sell-off continues. And people that tried to buy the dip ahead of the report yesterday, I'm sure will be looking to exit near the low of yesterday's session, which was 129.86. So 30-34 close. So if you do go into rally mode, I expect to see sellers at 130.
Question in the YouTube chat: why was Twilio killed yesterday? Because everything was killed yesterday. That is
and that had some mo going. Did they have earnings a couple days ago?
They did. They had earnings on what day was it? Last Wednesday. So
Yeah, so also, you look at it getting killed, but hey, look at this thing where it was at 2019, beginning of the year. So you got to keep perspectives on these things, folks. When these stocks have these kind of moves on the upside, inevitably you're going to have some kind of corrections, and that's what you had. This one pierced support yesterday. This support was at 123. How low did we get yesterday? 122.11. So getting a little rebound today. This one's interesting. You're trading right at the high from yesterday, 126.73. So you wanted to catch a 127 bid here, and you got 5 points of air up to 132.16.
Aurora Cannabis. I feel like we just talked about this last week, but Aurora Cannabis this morning raising their Q4, or they gave an update on their guidance, and they raised their Q4 revenue guidance from 100 to 107 million dollars net of taxes. By comparison, last year in the same quarter, they made $65 million in revenue. So
not a lot of money there, huh? All right. You got a little spike up to 660. And man, oh man, there's just a couple highs in that area. So 660, 670. I'd really like to see this thing getting a $7 handle and close above 7. It's been in a downtrend here, getting a low off the move. Find support at the close from yesterday, 619. Don't know if you're going to see that with the good news out, but they sure don't make a heck of a lot of money.
Just to clarify on the Lisa Su tweet, she replied directly to that website that broke it's not on her Twitter page because she replied to their tweet. So, but she did tweet from her verified account, but she was replying directly to the tweet that said Lisa Su considers a role beyond AMD, prepares a successor, and she smacked him down. So it is officially from Lisa Su, though it might not be on her profile page because she replied to the tweet. 8:32 here. We're going to bring on Chris Temple in a couple of minutes here. What else? If you have any tickers in the chat, throw them our way. We're going to kind of just walk through as many as we can throughout the show and just talk through what yesterday's charts means going forward. Let's see here, Joel. Was there any that you had that we hadn't gotten to yet on the list?
We talked about, and I'm just looking at the levels that we talked about on the show, and obviously, not being able to, see the carnage here. You did get a chance to buy Twitter at the low, before the move. So I thought Twitter looked okay yesterday. You know what we didn't do, or we got House of Mouse at the end of at the close today. So that should be interesting. That's trading up $1.90. That in a relative basis, that stock held up pretty well yesterday too. Trading up $1.85 here. Let's see what yesterday's high was. Yesterday's high 140.23. So right there, that's what you want to do. You want this to hold the high from yesterday. 142.22 was your high from Friday. So some numbers to keep an eye on there. In the House of Mouse, S&P is attempting to rebound here, back up at 26.57. And was there anything out? Any good earnings? No, there really wasn't much this morning. And also that the macro news and stuff, earnings are just not quite as important when you have these kind of macro moves going on. Is Mr. Temple with us yet?
He is with us. I'll bring him on, but that's a really great point you made. Everything takes a back seat when there is some sort of overarching macro headline that trumps the market, and as what happened yesterday. So we usually say that guidance trumps earnings, sentiment trumps guidance, trumps earnings, trumps ratings, but macro currency manipulator headlines trump all that stuff. So good thing to keep in mind. But I'm bringing on Chris Temple now. As I mentioned, he's editor of the National Investor, joins us periodically to sort of give us a nice top-down view of these markets. Chris, good morning.
Good morning, guys. How are you?
We're doing okay. I think we're a little out of breath from yesterday. How about you?
never a dull moment. I forget who it is, Spencer. You might be able to remind me who it is that makes Dramamine, but they got to be doing a land office business right now.
Yeah, Dramamine and Pepto, I think.
Yeah.
Maybe flying off the shelf. So on a day like yesterday, how are you approaching things, Chris?
Well, look, I already had people very heavily into what I call my favorite trade, the odd couple, long treasury ETFs and long gold ETFs. So we were already pretty happy before the last couple of days hit. Also, we've increased our positions in recent days in short ETFs, short and tech stocks and emerging markets. And I'll tell you, I don't like a whole heck of a lot else right now. I've probably whacked my energy related holdings, few as they were to begin with, in half through yesterday. And I'm probably, if we get a decent bounce here, going to cut some more. There's probably just one name I like still in that area right now that's back to a double-digit yield, and that's Sunoco, which I talked to you guys about last time. They've got a great business. They're insulated from what goes on in the oil price, and their finances, as they've transformed the company, have really they're really better than the market understands. So it's had a good year already. I think that there's more ahead of it. But I'm one who believes, and I like what you said earlier, Joel, about you're looking at a broad trading range for stocks. That to me is the best case scenario. There are a couple of things that could happen still with this whole China situation that I don't think the markets are really coming to grips with yet.
What are those?
Well, look, I've been saying for a while that this whole thing with China is way beyond sneakers and soybeans and cell phones. Now you've got some that think it's all about a currency war, including the president, who on this case, I mean, God bless him for understanding that in the big picture of things, we need to either bring China once and for all into the global system according to our rules and without their advantages, or they leave, one or the other. But when it comes to this currency stuff, he is completely out to lunch. I mean, as a lot of commentators have pointed out, Kyle Bass, a great interview yesterday on CNBC.
That was good.
I mean, China's been going to great lengths to keep their currency from falling worse. If it was going to trade based on fundamentals, he's probably right that the yuan would be 30 to 40% less. And let's not forget that the weakness in the last year or so is all over this trade war. It's not them deliberately trying to game the system or any of this other nonsense that we're hearing. And that's a very, very dangerous game that they're playing to try and push China off a cliff, because you got two things going on here, guys. Number one is, and I wrote a commentary about a week or so ago called "The World Turned Upside Down." And I do think that this is one of the several indications in front of us that the system of globalization and the integration of the globe's economies and even financial markets that we've seen for 2 or 3 generations is going to start to come apart. It didn't start with Donald Trump. It's not going to end with him. These are forces that are beyond him. And I don't think people realize that this is the direction that this could go. You've still got a lot of Pollyannas out there, even after yesterday's drop. Oh, they'll never let this go to the end. Trump doesn't want to be accused of trashing the economy. He wants to win re-election and so forth. But this is a bigger thing than that. And secondly, when you see that yuan break that 7 level as it did, again, this is beyond a currency war. You're looking at a systemic crisis. There is not, and Steve Bannon pointed this out about a week ago when he was talking about this whole thing. There is not a financial center on this planet, not New York, not London, not anybody, as leveraged as Hong Kong and the financial centers there. And if these guys now, and the scary thing, as I said yesterday to my audience, is that now the foreign policy hawks are taking over this trade discussion with China. And if they get their way, and they want to, some of them, they want to push China off a cliff. They think they can do to China today what Reagan did to the Soviet Union and bankrupt them. We're going to get rid of our biggest geostrategic and military competitor by bankrupting them. And back then it worked. And there were few consequences to the global economy back then, because, you know, in the grand scheme of things, what was the Soviet Union's economy in the 1980s? They weren't even a rounding error when you look at total global growth. It's a different kettle of fish with China. And if these guys think that they can cripple China and cause a financial crisis over there and we'll be immune, they're really nuts.
That was a good point that Kyle Bass made. They didn't devalue the yuan. They just merely stopped supporting it for a little bit.
That's right.
It's
right. And this whole thing has put them under way more stress than the average person realizes, and it's created more dangers than the average person realizes. We don't know what straw is going to come along. Xinjiang Bank was the second biggest bank in China this year that basically went belly up 2 weeks ago. And what started it was the market value of their dollar-denominated bonds cratered. So if we think that we're going to weaken China and cause a lot of dislocations over there, again, sneakers and soybeans, that isn't even the issue right now. It's are we going to have a systemic crisis that's going to cause some kind of a rolling repeat of what we had in 2008?
All right, let's go back. You mentioned the long gold and the long bonds trade, and conventional thinking, with these different sectors here, them moving up in tandem. Let's just talk about that. If there's, gold has always been talked about as a hedge against inflation or against market turmoil. We're not seeing that. Just talk about the historical patterns of the bond yields and gold trading, and what you're looking forward to in the future.
Well, Joel, that's why I term them the odd couple. In fact, the thing I sent out, I actually had a picture of Felix and Oscar. One of them labeled treasuries and one of them labeled gold, and an email that I sent out the other day in a commentary. But look, the old, and this is what gold bugs even need to be careful of. I said recently that this is not your father's gold market. Inflation has been wrung out of the system as we all understood it back in the 70s. And I'm unfortunately old enough to remember the late 70s and early 80s and how the market worked. And yeah, when you had inflation pressures, as most people would understand that, a gallon of milk, gasoline, and so forth, consumer prices going up, that usually would launch gold. We've got a different world today. Inflation, when it comes, is in the form of asset price inflation. There are so many systemic things, technology, productivity, global competition, that the inflation of the 70s is pretty much gone, at least for the foreseeable future. Gold's attraction at the same time that treasuries are also rallying and yields are falling is simply as the uncurrency. Remember the old 7-Up commercials? They called 7-Up the uncola. Gold is the uncurrency. The knock against gold always was that it doesn't yield anything. What nitwit or Neanderthal would put money in gold when you can buy XYZ yielding such and such? Well, now we're up. A couple of weeks ago it was 13 trillion. Now it's 15 trillion we just hit of sovereign debt on this planet that you have to pay for the privilege to own. And it's going to go up a lot more. One of these days, before too many years go by, the U.S. will join that regimen, and you will see negative yields in the U.S. as well, in order to keep all these skyscrapers of cards aloft if the central banks can pull this off. So it's today, when you look at the factors that we have monetary primarily, it's as goofy as it sounds historically, it's not a strange thing at all to see treasury prices and gold going up at the same time. And I think that's going to continue for a while.
Chris, which one is Felix and which one's Oscar?
I think I had Oscar, let's see, he was gold and Felix was treasuries, because Felix is a little bit more staid and, neat, dapper. And so that was the less crackpot of the two.
Sure. So for the average investor, the average trader here, what do you say to them until from now until the election? I mean, what can you do?
The first thing is the old physician's motto: first, do no harm. Don't take chances. Don't jump into anything whole hog, even the odd couple, frankly. Now, we've gotten a little bit heavy in there with my recommended allocations recently, but you're going to need to keep a lot of powder dry. You need to keep some cash on the sidelines. Don't get this idea that the Fed, as it gets dragged more and more into cutting interest rates, which it inevitably will. We all know that. If we didn't know it a week ago, we know it now with these increased trade tensions. Don't think that that's going to bail you out if you want to keep throwing money at momentum stocks, because at this point, and I think a few people are finally waking up to this, I already have, we should not be saying, oh, goody, more free money. We should be saying, oh, my God, more free money. because at this point, as the Fed cuts interest rates, it's not going to create more growth. That's past us. The only thing that they can hope to do is to lessen the pain and lessen the rolling deflation that we're going to see in different areas. Most acutely, which scares the heck out of me again, is in the oil and energy sector in this country.
Let's talk about oil here, and definitely get any talk of slowdown or recession. Let's just talk the crude oil market here, and then something we've talked on and off about over the years is the debt of some of these oil companies. They really couldn't even rally when oil rallied here. Give us your perspective here, and I know you like Sunoco. What's the symbol on that one?
SUN.
SUN. Give us perspective on the crude oil market, and also some of the drillers and the bigger refinery companies.
Well, I'll tell you, as far as Sunoco, the reason I like them real quick, Joel, is because they're a wholesaler. They have one business and one business alone pretty much these days, after they've gone through a lot of asset sales and some purchases in the last couple of years or so. They wholesale gasoline and other fuels to retailers. Case closed. And unless you think that with what's going on in the world, you're going to see a significant drop in highway traffic and vehicle traffic in the U.S., the volumes of their business is still going to be good. So I like them for that reason. As far as drillers and so forth, like you said, Joel, the energy stocks have been a dog's breakfast. Even when oil has rallied, they can't get out of their own way. And I'll tell you, this is a lesson that I've been telling people that we don't have time for today. But the energy sector today, and this has been brewing for a few years, is like the mortgage securities and real estate was 12, 13 years ago before that bubble burst. This is a classic example of how people need to change their thinking. I talked about this in the context of gold and interest rates a few minutes ago. By trying to stoke inflation and growth, the central banks, led by the Fed, sow the seeds of deflation. You have got a debt monster in the energy patch. Even when you go back before the crash a few years ago and oil was $100, how many companies were cash flow positive? Let alone, God forbid, had gap earnings. A handful of them did. You can count them on the fingers of a couple of hands. So you've got this debt monster out there because of all of this free money and very little return elsewhere. Pension funds, hedge funds threw money like no tomorrow at these drillers in the shale patch. Here, go drill some holes in the ground and make us some money and pay me my 10% on your junk debt for my troubles. That only lasts so far, and it leads to overcapacity. It's why we have oversupply. And I'll tell you, if you want to see an interesting contrast in the world, look at what Halliburton has said in their last two quarterly statements, where their business in the U.S. as far as drilling is down 10% this year. But at the same time, overseas, their business is doing pretty good, because unlike in this country, where you had all of this free money that caused this bubble in production and in debt and everything in the oil patch, elsewhere, a lot of these other countries didn't keep up. Saudi Arabia is just going nuts, hiring Halliburton, McDermott, a lot of different companies right now to do business over there. But in this country, even some good companies, I just don't see a stock I would buy right now in energy service pretty much.
Chris, before we let you go, do you have a target for us on the upside or the downside in gold?
As far as on the upside right now, most technicians are looking at 1525, give or take a little bit. When gold peaked in late 2011 and it came down, that area for a while is where gold chopped around. It had some support there. Near term, that could be some resistance, but I'm much more about technical levels, Spencer. I'm all about the narrative. And for as long as you have the amount of negative yielding debt in the world increasing, for as long as you have Donald Trump wanting to start a currency war and bring off an assisted suicide for the U.S. dollar, you got to like gold going forward, whatever the price is for the foreseeable future.
Is gold the poor man's Bitcoin?
I don't know if I'd put it that way. I don't even put gold and Bitcoin in the same category. I mean, I know people are putting money in them for the same reasons. Silver would probably be the poor man's Bitcoin.
Yeah.
But I'll say this in closing, I love the gold sector. I'm less enamored of silver and the base metals because they can go a lot lower if this whole trade thing really goes from bad to worse. But, be careful about gold, folks. Don't ever buy gold and let somebody store it for you, that kind of thing. If you want to be an investor in gold, buy the ETFs, preferably the leveraged ones. Find a couple of good individual companies. If you want gold as mad money, buy a little bit of it to keep in your hands, but better off buy tobacco and whiskey if you think things really might get that bad.
All right. Chris Temple is the editor and publisher of the National Investor. Chris, as always, thanks for your time and have a good one.
Take care, fellas.
Thanks, Chris.
All right, 8:50 here. Wow, kept Chris on for a while there.
It's good. It's good. You got to have a different perspective on the markets. I mean, we could talk about, daily highs and lows and things,
Sure.
Of that nature and the implications. But, you have a longer term perspective on the market. Really glad we brought Chris on here. He's a great listen.
All right, where are we at in the S&Ps, Joel?
We're chopped. It's chop suey out here. We're still up 26 and a half handles at 28.50, 6.50. Really would like to see continuation through the pre-market high of 65 and a quarter. Not much above that. You got 86 and a quarter is the intraday high from yesterday. That would be a big old nice target. I think what you're going to see a lot today is a lot of thrashing here, maybe between 28. I mean, who knows where this thing's going? I just think you're going to see a lot of vacuums on both sides until we can find a little bit of stability here in the market.
All right, I want to bring on our second guest of the day, Dennis Dick. Good morning.
What's up? What's going on?
How's it going?
I'm really trying to figure out what is only up 0.45%. Because we got the SPY trading up 0.5%. I'm trying to figure out what is only up that much because every stock I look at is up 1-2%. So one of two things is going to happen. Some of these stocks have got to come down or the SPY has got to go way higher because I am just scrambling around unless it's just selective perception on my part. But I'm looking pretty much at the SP 500. Most of China is up over 2% here. You look at stocks like Alibaba just ripping here this morning. But even when you go into like conservative stuff like Coke trading up 0.5%. So, this is the stuff that usually doesn't participate as much with the market. And I'm just looking, then you go into the Caterpillars, they're up 1.3%. The Microsoft's only 0.75%, but still way more than SPY. Apple's 1.25%. Amazon's trading up 1%. You just look here and you just start analyzing and you think, holy cow, I don't see what the ARBs are doing really. And I must be missing something because they're pretty good. I mean, the high frequency ones are pretty good. I mean, it's always a guessing game because there's a lot of stocks not open yet. So even when you're doing the ARB, when, you don't have all the stocks physically open, it's always a bit of a guessing game. But from my perspective, looking at the stocks, the SPY looks way too low. So I don't know what that means, but I do know what that means. It means the stocks are going to come in or the SPY is going to go up. So we'll see what happens. But
how long do you?
Different headlines here. That AMD stuff was just ridiculous. Like some publication comes out that Lisa Su is leaving, and stock tanks 4% on that headline. I actually got hit on that, and I'm like, "What's the headline? I don't see the headline." I'm looking and scrambling around, and I'm, all of a sudden I've been, actually I was short AMD, so I got covered on it. And I wish I would have went long, but because obviously they came out here and now it's trading up 3%. But anyways, there's been lots of individual stories.
Well, that's your fault for not having WCCF Tech on your.
I was scrambling around looking for that headline for 5 minutes, and finally I found it on Twitter. So I'm like, there's something going on major in AMD because AMD was trading up 1.5%, and then boom, it fell up like $1.50 on that. Like we got down like $27 almost.
I saw it. I know.
Unbelievable. And then I'm looking, I'm like, what is that publication? I'm like, and then I'm trying to analyze. And then I had 102 overnight positions. So you move on to something else, right? But anyways, I guess I should have just bought a bunch of AMD and forgot about it, and I would have been happy right now. But all I'm saying is this, at least in the morning here, this market has been absolutely incredible here overnight. We were down 60 handles last night. 60. It looked like it was going to be the end of the world. Like it almost looked like we were crashing. Because we were down 800 Dow points before. You come in, we lose another 600 Dow points after hours in the futures, and you're thinking, wow, this is just going to be ugly tomorrow. And you wake up and they get it all back. I mean, you cannot stop the buy the dip mentality. That being said, I got to think there's some nervous money managers out there. So I got to think there's going to be some people looking to lighten up on this bounce. So I'm definitely not chasing this bounce. It's why I'm actually conservative with, not buying the SPY here, despite the stocks. I'm more apt to short stocks that are just seemingly too high here this morning, because some of these stocks are really bouncing back nicely. So I'm actually looking at trying to lay out some shorts here just on some of the stocks, trying to still do the ARB a little bit, but I mean, it's been wild here all night. It's been wild. That's why I obviously couldn't be on the show with you this morning. I'm trying to manage a bazillion positions.
Just talk a little bit. I know the SPOOs were closed. Just talk a little bit about the that 6 o'clock open, and how you tried to react to it and what you saw in the market.
I mean, headline comes out, the Treasury headline, which I'm trying to even interpret because it's not a headline you see every day. What was the headline specifically again, Spencer? I saw it come out.
China is a currency manipulator.
Yeah, treasuries and labeling them as a currency manipulator. And it's S&P futures were not open. That came out about 3 minutes before the open. I'd say like at 5:57. So you're like looking, and there's not an initial reaction, but then you're thinking, oh, the futures aren't open. This is probably going to tank. But then you're already down 12 handles. So, what is that worth? I tell you, at 6 o'clock when they reopened the futures, they puked that thing 30 points in like 3 minutes. Really fast. And obviously we were trading down the entire night, like until 8 o'clock when we were down 50, S&P futures points. And we came all the way back. I don't understand, what was the catalyst here for the rally? Why are we all the way back? That's what I don't really understand. I don't see, too many people talking about why did we rebound? Like China obviously helped. I mean, I see these China overnight, and the overseas markets helped. But was there another catalyst? Did somebody say something to spark the rally in China? Because
that's an interesting point. I mean, they're saying they came in that they tried to support the yen, basically.
Yeah. So China's taking and saying they're not a manipulator here, and they're not going to be doing this forward. So they backed off on that stance. I mean, this is just a macro-driven, headline-driven market. What's the next headline going to be? That's all that matters. If Trump says, I'm optimistic we're going to get a deal, we're going to rally 500, 600, 700 points, just like that in one tweet. If he says, playing hardball, and, it's going to be completely different there too. So very, very, very tricky market to trade. I'm trying to just wrap my head around even what I've got this morning. But, the headline risk in this market is, again, as high as I've ever seen. We obviously started just with the original Trump tweet 4 days ago. I mean, put it in perspective. 4 days ago, 4 trading sessions ago, this S&P futures were challenging all-time highs. That's the quickest sell-off I've seen in a long time, where we lose 5% in 4 days. That's a big sell-off. And especially if you consider where we were last night, trading 278 on the SPY. That was giving back the entire June and July rally, but basically almost the entire thing in 4 trading sessions. So what I do think is you do have some people caught long here because it was too quick. There wasn't a lot of spikes. People don't like losing money. They sit on losers. They're like, oh, I'll sell the spike. So considering that, it's hard for me to come in here and be a buyer here right now. But one headline can change all that. So, I'm cautiously putting on shorts here. That's what I'll say this morning. I'm cautiously playing the short side here, not on SPY, but on the individual stocks this morning, because the SPY is too light. So like I said, if I was actually doing, I'd probably be buying SPY and shorting the individual stocks, because it looks like there's a lot of stocks that are trading up 3% here this morning, and I'm not sure that's justified.
How long does it take, in your opinion, for the equilibrium? I mean, are you looking 1 minute at the open, 1 minute after the open, 2 minutes? Because the ARBs do.
Oh, it's like a minute after it comes
really
in. They don't play games. I mean, once you have all the stocks open, this is the way, and people don't know this because they don't do the ARB. I live on the ARB. So once all the stocks are open, the high frequency traders have totally taken it over. I mean, you've got the 500 stocks, you've got bids and offers on all of them, a minute or two after the open, because some of the times the New York Stock Exchange stocks take 2 or 3 minutes, but say like 3 or 4 minutes after the open, everything is open. So then it's just the index, it's just basic math. But, when you're trading, the S&P high frequency traders are giving you a 3-cent market in the SPY, they're using the main components, but there's a little bit of a guessing game for, let's say, the other 300. You can get a pretty good feel for maybe the top 50, top 80, but you get down below that, I mean, you start looking, at some of the smaller components, they're widespread, like Campbell's Soup, for instance. The spread on that is 40.80 to 41.80 this morning. There's no market in that. So where is it opening? What's going to happen here? What's going to be the difference? I mean, it's a guessing game. So on those bottom 400 components, it's a bit of a guessing game to where those are. Where, you know, you look at a stock like Apple or AMD. Well, AMD's got a 1 cent market. You kind of got a feel for where it is. So, but that arbitrage cleans itself up 5 minutes after because all the stocks are actually open. So then it's just basic math. And that's why a lot of the high frequency traders probably don't do the arb after hours. There's some that try to do it like we do it. Like we try to, you know, we get a feel for it by using the main components, but you can't do it perfectly because there's 300 or 400 stocks that don't have much of a market at all.
All right, that's
Spencer. You wanna wrap things up for this?
Final thoughts. Just like to give you a final thoughts here, just
sure. Go ahead.
So, wild night. Gold was all over the place. TLT. Everything has been all over the place. So all we can promise you is there's going to be a lot of volatility here again. And I just think when you get stocks, you know, that were trading down 3-4% last night, now they're rallying that 3-4% black plus tacking on 2-3% more. I think you'll have some money managers looking to lighten up. So I don't know if this market's going to have the follow through that everybody thinks. But again, we're down a long ways in a couple of days. Could we rally, you know, rally 500-600 Dow points? We could. We could do anything. So just expect a lot of chop, a lot of volatility. I think the fade trade is still on though.
all right. That'll be it for today's show. If you missed any part of it, catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, Spotify, or watch us on YouTube. Thanks to our guest, Chris Temple. Thanks to all of you in our chats. Please remember all the information from our show is meant to be used as informational purposes only, not for investing or trading advice. Questions, comments, concerns, email us, premarket@benzinga.com. Everyone have a good rest of your day. Don't be stressed. Remember, it's only one day. Tomorrow is another day. We'll be back with you on Wednesday. What day is today? Tuesday. We'll be back with you on Wednesday.